Hi, this is Henry and welcome to HC Strategies Forex Trading course. So in this course, we're going to highlight and show you how you can make a few hundreds to a few $1,000s trading the financial market, spending a maximum of 10 minutes in your time of the day analyzing the financial market, looking for setups that can make you between a few hundreds to a few $1,000s. So if you're a student or you have a 9-to-5 job or you're a parent, this is a strategy that once you've gone through this course from the beginning to the end, you're going to learn how you can make money trading. So we're going to start by talking about using this Euro US dollar as an example. And right here, the first thing that we do when we come into the market is to understand where we are in the marketplace, whether we are in a premium or we are in a discount. And in order to do that, we use the Fibonacci. And you can see that right here. So if you're a new trader and you don't know what a Fibonacci is, you don't really need to worry about the names that I'm using. All you can just do is duplicate whatever you see me doing on my screen. You just duplicate that onto your own chart. So as you can see right here, I'm using tradingview.com. So this is the first tool that you're going to be using to do your market analysis. And after you're done doing your market analysis, the next thing you're going to now do will be to check the risk that you want to use for your trade, which I'm also going to show you the tools that you're going to use for that as well. So we can just firstly look at the tool as well. So right here, this is the tool that you're going to use to calculate your risk before you place any trade. So I wanted to start by showing you this tool so you can get used to them. So the first tool is TradingView. The second tool is Cashback Forex. So this is what you're going to use to check your risk. So before you enter any trade, let's say your account size is $1,000. Now this is what you would use. Right here, you can see account balance 1,000, and now you want to risk 0.5% of your account. And this is you trading. Let's say we're working with Euro US dollar, and right here, Euro US dollar. This will be the entry price and this will be the stop loss. So you don't have to worry about how do I know what the open price or the entry price is and the stop loss price. I'm going to be explaining every single detail in this course. So if you stick around and watch the videos from beginning to the end, you're going to learn how to do this independently. So when you're done adding your open price, which is the entry, and the stop loss, you click on calculate, and it's going to show you the lot size to use for the trade and how much you're going to be losing in that trade. So as you can see in this trade, if you place this trade, if price hits your stop loss, you're going to lose $5. Now, if price should hit your take profit, let's say, for example, is a trade of 1:5 risk to reward ratio, that means you're going to make 5 times what you've risked. So this is just an example, and 5 times what you risk is around $25. But this is just me trying to give you an example with very minimal loss as possible. But when we go into this, you'll realize how you can make a few hundreds to a few $1,000s trading this concept. So another thing to know is that for you to place the trade, you can either be placing the trade on the MetaTrader 4. So you can see that right here. This is the MetaTrader 4 platform. You have to download that on your cell phone or on your computer as well. So I personally use MetaTrader 4, so you can also download that as well for yourself. So that being said, the next thing we'll do now is to go to the chart. And the first thing is we want to see where we are in the marketplace, right? And to see where we are in the marketplace, our focus is basically on the recent high and the recent low, right? And if we use this Fibonacci and place it on the recent high and the recent low, you can see that anything above right here is a premium. And anything below right here is a discount. So what does a premium mean and what does a discount mean? So basically, when price is at discount, it simply means that it is below equilibrium. It is below asking price. So let's say, for example, you wanted to buy a television from Amazon, and then they tell you that right now we have Black Friday and it's a discount, 70% discount, 30% discount. It's the same thing in the marketplace. So price can go from its actual price to going into discount, and the institutions are buying in a discount. They're looking for potential areas to buy at discount. If we're bullish, they're looking for buys at a discount. If we are bearish, they're looking for sells at a premium level. So right here is the premium, and between the premium and the discounts right here is called an equilibrium. So it's the midpoint, the center between the premium and the discounts. So that being said, the next thing we do is we now start to look for potential areas that price could be coming down to, or price has visited. And right here, we can see we have this inefficiency right here. We can outline that. I'm also going to explain in full detail what an inefficiency is. So if you follow through on my course, you're going to learn more about inefficiencies and how they work. So you can see that price taps into this inefficiency, and then we'll go scale down to the daily. And then the next thing we do, we'll go to the 4-hour time frame. Now we want to see significant things that are also resting in that inefficiency area. So, and right here we can see this was the last push up to the upside that took liquidity from this high and then drop down, breaking structure. So we outlined this inefficiency right here. So all we're looking for is for price to come into that key level. And once price is in there, all we want to do is to look for a 15-minute shift in market structure. And then we will look for sells for price to go to the downside. Now, I'm going to use the buy replay, so it's going to be much easier for us to see the previous price action. And right here, you can see we made a low and price created a high, and then we dropped down, breaking structure, and you can see that very nicely. We broke that structure, and after breaking that structure, what do we see right here? What we saw right here is this was the last push up that took liquidity before dropping to break the structure. And within this candle, we also have an inefficiency in this candle. So that right there is going to be our entry position. So if you have a 9-to-5 job, all you need to do is to go through the course from beginning to the end. You understand how to do this analysis on your own. And then all you need to do is areas like this, you put your sell limit order right here, and then put your stop loss right here as well. And then that is it, and you'll be done. You just put that limit order right there, and then you move on with your day. So before you put the limit order, you use Cashback Forex to calculate your risk. Find out what is the lot size that I'm going to use on this trade. How much am I willing to lose in this trade? So let's say, for example, you're risking $100 on this trade. Now, your stop loss will be here, and then your take profit, you look for the potential inefficiency that is within this range. And right here, you can see the inefficiency right here. This right here can be your exit position where you set your take profit position. And right there, it will deliver a 1:4.5 risk to reward ratio. So if you're risking $100 on this trade, you could potentially make $450 on just one trade, which is basically what a lot of people make in their 9-to-5 job in a week. So it's something you can just do it as a part-time. You can basically spend about 10 minutes doing this analysis. As you can see right now, it's even barely 10 minutes. And I've literally shown you the analysis from top to bottom. And I'm also going to show you another example right here. And the next thing we do, we go to 1-hour time frame. And on the 1-hour time frame, this is the first example. And I'm going to take it off. On the 1-hour time frame, you can see this inefficiency right here. Then you mark that out. So all you want to see in this inefficiency is for price to come into it, and you want to see a 5-minute shift in market structure. Now we're gonna use the buy replay again to take this back, so it's much easier for us to see what happened in the past. So we'll go to the 5 minutes time frame again, and right here on the 5 minutes time frame, you can see price created a low. Then right here you can see this. Let me take this back so you can see it very clearly. So right here, you can see price created this low right here, and then we created a high. You can see this low. I'm going to outline that. This is the low. This is the low, and then this is the high. And then right here, you can see this low got broken right here. I'm also going to explain more about break of structure and how to understand market structure and everything in the course. So this is the low, this is the high, and then right here we broke structure, breaking this low. right? The moment we broke this low, all you're looking for is for price to come back to an inefficiency. And then the inefficiency we're looking at is this one resting right here. You can see that how nicely price came back into that inefficiency right there. So now if you have a job, you can basically just place your all you need to do is to place your alerts. There are alert systems on TradingView. You place the alert and you can go about your day. And then once the alert hits, that means there's a break of structure. You look at it, spend 10 minutes analyzing to see if the break of structure you were anticipating for has been broken. And the moment you see it's broken, the next thing you do is to place your buy limit or your sell limit order. So we'll go to 30 minutes time frame now. Now on 30 minutes time frame, we're anticipating for price to come into this inefficiency. Now you can place your take profit position right there. This is the 1:19. This is not really the kind of trade that you're going to be getting all the time. Once in a while, probably about a few times a month, you can get a 1:10 to 1:19. But it's not something that I'm going to tell you every single week you're going to get a 1:19 trade. It's just occurs sometimes when there's high volatility in the market, probably once a month or twice a month. Don't expect to see a 1:19 trade every single month. But when it presents itself, take the trade. If you're risking about $100 on this trade, what you're going to be making is almost 20 times that. So that will be about 10x of $100 is 1,000. Then you'll be making about $1,900 on just this trade, risking $100. So you can see how it works. Sometimes you're going to make more, sometimes you're going to make less, but all that matters is that you stick to the plan, stick to the strategy, and use the concept. And sometimes you're going to get losses as well. But if you compound the wins, you're going to realize that at the end of the day, you're going to be making more profit. Now, this is the second example, and then I'm going to also show you a third example as well. Now, we go to 4-hour time frame. Now, on the 4-hour time frame, you can see we have an inefficiency right here, and we also have this inefficiency right here. So what we do, we outline this inefficiency, and we're anticipating for price to come into this inefficiency. And once it's in there, all we want to see is a 15-minute shift to market structure. Now we're going to play it and see what the market is going to do when it comes into that key level. So far you can see price came very close to that key level and then it dropped down. And then right now it's coming back in to that position. So what we do is now you put your alerts right here, and then when price comes in there, it tapped into it and then it started to reject. But as you can see, we didn't see any 15-minute shift to market structure, which is what we want to see. All we want to see from this key level after tapping it is a 15-minute shift to market structure. And right here, there hasn't been any 15-minute shift to market structure. And price tapped into that key level, there still isn't any 15-minute shift to market structure. So what we do is we still stay patient, waiting to see price show us what we wanted to show us. That break of structure in the required time frame, whether it's a 5 minutes or a 15 minutes time frame, we just want to see that break of structure. Now, price is in that key level again. All we're waiting for is to see structure. And now right here, you can see structure. This is a structural low. Right here is a structural low. And right here is a structural high. And then we have a break of structure right here. Then look right here, we'll have an inefficiency. So this is where we put our entry positions. So maybe you're working and then your alert hits and you see the break of structure. You look for the inefficiency right there, so you can see, and then you use the overall high as your stop loss zone. Then that's it. You allow price to do its thing. So even if price is coming very close to your stop loss, it doesn't matter. All that matters is you've placed the trade, you followed the rules, and you just wait for price to do its thing. So we're going to set our take profit position. Our take profit position in this one is going to be this inefficiency right here. And we're going to target this inefficiency right here. So this is the take profit. We can target 1:5 risk to reward ratio. And let's see what price is going to do. So you can see how price came into the inefficiency several times, but still sustained to run above it, took liquidity above it, but still didn't rally above the stop loss zone. So you can see how this plays out very nicely, and price went straight to the take profit position. You can see that. So it came very close to the take profit, but it didn't hit the take profit. So let's play that and see. And now it's hit the take profit position. So you can see how you can do this time and time again. We can go all day doing this. So you can see several examples. I'm still going to show you another example right here. So right now we're looking at another setup. You can see this inefficiency right here. This inefficiency resting right here. All we want to see is price hits this inefficiency, and then we want to see a 50-minute shift of market structure from this inefficiency. Now this is a low, this is a high. You can see that very clearly. All we want to see is a break of structure. Now this is a break of structure. This was the last move up. Now this is the inefficiency we're going to use for our entry. Now we're going to be targeting this low. The 1:2 risk to reward ratio. And as you can see very nicely, price tapped in and delivered to the take profit. So I'm going to end this here. So if you found this insightful, you can click the link below and you can learn more. Follow the course, do the course from beginning to end. You're going to learn how you can do this independently. Thank you for tuning in, and in the next video, I'll see you.